are also digesting some of the Canadian bank earnings that we got. Now we've had 4 banks reporting quarterly results, and it's been kind of a mixed picture. National is being called sort of best in class. Tomorrow we're going to hear from CIBC and TD. We've had Richard Fogler on the desk with us. You're a shareholder of some of these bank stocks. RBC is one of them. It didn't manage to finish out the day higher, and I think because it wasn't a clean set of results, still some blemishes as the CEO touts progress.
They did okay. The earnings number beat adjusted. By the time you adjust these things, you make up the you get to make up the number.
Look good,
exactly. Yeah. But the adjusted number did. If you take that at face value, they did beat that with the good news. The bad news was that it was basically based on fixed income capital markets trading, and that's not a recurring revenue. Those are very spotty earnings, and so if you pull that out, they didn't do as well as everybody expected. So from our perspective, it was okay, not great, not terrible.
Why do you own it?
We own it because we think it is the best Canadian bank. We think the banks are basically pretty undervalued. If you take a look at the banks in general, they make up, TD's made today's 15% on capital. They make about 25, it's a very simple story. They make about 25% on capital in Canada. They make about 6% on capital in the United States. On average, they make about, you split it in the middle because they're about half and half.
Yeah.
But if they can make 16% on capital, the stock should by and large do 16% a year. That's a pretty good rate of return. And also the banks.
Except that's not what's happening.
Right now you're in I was just going to say, so right now you're in a downdraft. Everybody's looking at the banks. They're getting slaughtered because they're all getting pretty good provisions.
Deposits, yeah.
And so the provisions for loan losses were frightened. Everybody's frightened of CRE, real estate loans. So the provisions are up. When that sort of settles down and reverses a bit, the earnings will go up a bit. And maybe and I'm not saying this is true, but if banks get to be more interesting again, then you'll get a slight lift in the index. And across the board, because it'll hit them all. And if were that to occur, then you get 16% plus maybe a couple of percent, 18 or 20% a year.
On the dividend.
Go beat on. Yeah. If you get 16%, it'll be sort of 10, 11% on the stock price and 5% on the dividend, roughly across all the banks. And that's a pretty good rate of return. National Bank today, everything that could go up did go up.
Do you like National? I mean, you can't really talk about the valuation being as attractive now.
That's the thing. National.
Can you argue it's warranted? You put out premium results, you get a premium multiple.
Exactly. And I mean, National, if you take a look at, as I said, TD or Royal, they did fine, not terrible. They got, their numbers came in because they had one non-recurring. With National, it's just the opposite. Everything is, everything that can go up, it is going up.
Because
the U.S. That's good.
Because the U.S. is struggling.
They're more Canadian than U.S.
Yeah,
right? Remember, the Canadian banking business is fabulous. The U.S. banking business for the Canadian banks is they try and tell you how good it is because they make so much money. Royal makes so much money, they pour it into the States. And because what are they going to do with it? They can't put it, if they could put more in Canada, they would. They
could return it in dividends.
They can return it in dividends, but what are they going to do, pay out 10%? And not reinvest their capital. Our previous guest was talking about, why you want a company. You want a company that's going to redeploy its capital at high rates of return. That's what builds value. And if they're not doing that, then it's a straight sideways. And yes, you can do it in dividends, but it's not going to cause people excitement.
We've got earnings from Royal and BMO, which are U.S. exposed, to your point. TD has been waffling as a stock. There's a lot of knocks against it. What do you think the setup is for earnings for TD tomorrow?
The street number is supposedly about $1.95. We own TD. We've owned it for a long time. We've done great in it, even with the recent.
Yes.
But we think TD is very good because we think in TD's case, unlike the other banks, we see a clear path to them doing better in the United States. They have a big deposit base in the United States. They're way overcapitalized. They have to add assets, and They haven't now. They haven't done it for a few years. But if they can add assets on top of that, the assets are, making loans is a relatively easy thing to do. And that was why they tried to buy First Horizon. Unfortunately, a little bit of a hiccup there.
Yes.
But that's what their goal is. But if they can, that'll really jump the earnings. And they're way overcapitalized.
Yes.
At the moment.
Yep.
That's a drag on the earnings. But then they've got Charles Schwab, which if you flip out Schwab's a big deal. So TD's really selling at 7-8 times earnings if you pull out the Schwab. So if they when they can buy a First Horizon, when they can redeploy the Schwab capital, theoretically they will do better. Now we'll say, the first City National, they got an extra $3 billion last quarter. They've had it for most of the quarter. If they stuck it in a T-bill, they got 5%. If you gave them 1% on that, they should have made $30 million in the quarter just from that, and they lost $22 million.